Hi Forex traders, so welcome back. This is Karis Trading Institute and this is the new week commentary for the dollar and foreign currencies. Alright, just like we usually do, we analyze the dollar and foreign currencies and we anticipate to see price delivery during the week. Alright, so but before we do that, we would like to first of all go check the economic calendar just to see if there is an underlying high or medium impact news event that is going to unfold during the new week. All right, so the first thing we do is just go to the forexfactory.com, click calendar, and then you observe the new week calendar. All right, and then you take note of the high impact news event as denoted by the red box that you see here, and medium impacts denoted by the orange box that you see here. Alright, so on Monday you can see that we only have a high impact news coming on the dollar. That means we may see a low volatility day because we have a lot of low impact news events coming up with only the dollar throwing a high impact around 1:30 p.m. So we like to focus on dollar associated pairs, and we anticipate to see price forming the high or low of the week between Monday, Tuesdays to Wednesdays at the high or medium impact news event. All right, so we are taking note of the timing and the event. 1:30 p.m. on Monday 15th, there's a high impact news event coming on the dollar. Then on Tuesday, we see that GBP is throwing a high impact by 7 a.m. the opening of London. This is GMT plus 1 time. Alright, so you just go through all the calendar and take note of this high and medium impact news event. Then you go back to Trading View to analyze the benchmark asset you are trading. Alright, so we are interested in analyzing the dollar index because that's the benchmark asset for foreign currencies. Okay, it's not tradable, but it determines the direction. It shows us the direction of the dollar, all right, as reflecting interest rates. And we would like to do the opposite of what we see on the dollar index. We would like to implement the opposite on foreign currencies because of intermarket analysis. All right, intermarket analysis teaches us that whatever happens on the dollar, because the dollar has an opposite relationship with the foreign currencies, we would like to see the opposite coming up on the foreign currencies. So if the dollar is bullish, we like to anticipate bearishness on foreign currencies. The Euro USD, the GBP USD, the NZD USD, all currencies that carry the dollar as their quote currency, that is a foreign currency. All right, so that's just what that means. So this week we can see on the dollar index, this is the monthly time frame. We like to determine institutional order flow of the higher time frame, okay, by simply studying where price has traded away from where price is currently and where price is likely going to go to. That is the draw on liquidity. So previously, overall on the monthly time frame, we saw how the dollar traded into a bearish mitigation block right here and a sell side imbalance, buy side inefficiency. Then the dollar created a new expansion to the downside, trading into a discount, a shallow discount between this range, the low to the high, 50% of the range. Price traded below 50%, that is discount. All right, and then we see a level of reaction, a rejection in that region, a specific institutional reference point within that discount that the dollar traded into was the fair value gap right here. So the dollar traded into it, came back to take out the low of that previous low that was created here, took it out, and we saw a rejection into that range. So this month we see the dollar throwing a level of bullishness, and this is also coinciding with the seasonal tendency for the dollar. The seasonal tendency chart for the dollar shows us that we might see a level of bullishness on the dollar starting from the month of May, which is the month that we are in currently, and going through the end of May, we'll be seeing some level of bullishness on the dollar. It's a repricing. Okay, so this is exactly what is unfolding on the monthly time frame. So where is the draw on liquidity on the monthly time frame? We like to see the dollar trade into this old high of the previous monthly candle, and I'm looking at this rejection block right here. rejection block right here is also a draw on liquidity, so we like to just label this as rejection block. Okay, that's a rejection block you see there. Then we have an equal high or relative equal high right here. That's a buy side liquidity residing above that level, buy side liquidity residing above that level. And then you can see that there is this sell side imbalance and a buy side inefficiency on the monthly time frame, and because of this wide range fair value gap, we measured 50% of the fair value, the low here and the high of this fair value gap. 50% of it is called consequent encroachment. Then we'll be paying attention to consequent encroachment, or just CE. Okay, these are possible levels of repricing, and ultimately there is also a bearish order block right here. Then if you pay attention carefully, you would see that there's a volume imbalance here that was violated. Price may likely come and find support at that, or resistance, sorry, at that level. Price might find resistance at that level. Okay, so we have rejection block, we have the rejection block, we have the buy side liquidity pool, we have the consequent encroachment, we have that volume imbalance that was violated to the downside. Price might find resistance at that level, and it's coinciding with a bearish order block right there on the monthly time frame. So top down analysis, that's what we are doing. Go down to the weekly time frame. So on the weekly time frame, what do you see here? We saw the dollar took out liquidity below that low. Okay, this was more like a liquidity grab or stop onto the downside and start to go to the upside. So within this range, where are the possible draw liquidity? Let's outline them. There's a fair value gap right here. It's a possible draw liquidity. Okay, on the weekly time frame, the fair value gap right here, and the rejection block of the monthly, we still have a bearish order block right here that has a fair value gap attached to it. Bearish order block has a fair value gap attached to it. This is also a possible institutional reference point. So currently we see that there is a new bearish order block that was created right here. Price created a bearish order block. Okay, so we can go down to the daily time frame, see if we have more confluences or a more defined price action. So this is it. The dollar took out the low here. Then we saw the dollar created a new expansion to the upside right now that gives us a shift of market structure. We can just use this as our new shift of market structure. Okay, price had been forming lower low, lower highs, lower lows, lower highs, higher lows. From the higher highs, violated this, then price broke structure again. Okay, so we might see, so where is the drawn liquidity? On the daily time frame right here, the drawn liquidity is that fair value gap outline on the weekly. You can see it here coinciding with a mitigation block on the daily time frame, and you can also see that there is a fair value gap right here, or a bearish order block to fair value gap. So I'm looking at these levels because these are the levels that might want to bring some reactions in the marketplace. However, remember, the higher time frames are the main draw on liquidity. The monthly time frame has already outlined this rejection block. The relative equal high is here, which is our buy side liquidity pool residing above that. And remember, the institutions are looking for two things. They are looking for liquidity pools and they are looking for inefficiencies. So we are paying attention to these levels. Okay, so also because we are in a new month, so we might want to quickly do something called the look back and cast forward analysis, just to identify the previous liquidity levels. So you just bring a horizontal line on the beginning of the month, and we would like to study the highest highs and the lowest lows of the last 20, 40 and 60 days, because that's where price action is going to go to. So just draw your trend line, then click on settings and click on bars range, activate bars range, so that you'll be able to see, to count the number of bars. So 40 days, this is 40 days, so you can see that that's our monthly buy side liquidity pool is coinciding with the 40 days high, the highest high in the previous 40 days. All right, and let's also do the 20 days. Remember, in your look back analysis, you're identifying the highest high and the lowest low in the last 20, 40 and 60 days. So in the last 20 days, this is our high. All right, so these are the levels that the institutions will trade into, because those levels are the draw on liquidity. Okay, those levels are the draw on liquidity, the highest high in the previous 20 days and the highest high in the previous 40 days. So extend to the right or to the left, let's see. So you can see that level is a buy side liquidity residing above that, and this is the highest high of the last 40 days. We've already outlined the buy side liquidity there. Okay, so I think we are bullish on the dollar right now. We are bullish on the dollar. But going into the week, what am I looking at? I'm looking to see the dollar show a possible retracement into this level, so that the dollar might possibly form the low of the week at that level, this fair value gap of the internal range, fair value right here. All right, this is also because this is a powerful institutional order flow entry drill I'm seeing here. Okay, so I would like to see the dollar give us an opening and trade into this level, possibly to form the low of the week before we start to see the dollar again throw that bullishness into those levels. However, the dollar might want to take out buy side liquidity here before we see a retracement coming into the marketplace. All right, so we'll be paying attention to the lower time frames to see if we can identify a gap open higher, which tells us that we are bullish on the dollar, and a gap opening lower tells us we are bearish. A new weak gap opening higher or lower tells us where we are going to trade into, gives us more confirmatory signature. So just one more time, if we go to the 1 hour time frame, let's see how this looks like on the 1 hour. So this is the 1 hour time frame, and this is that level we are trusting to see the dollar trade into, that daily fair value gap. All right, to form the low of the week, and you can see that there's an old low there and there is a bullish order block. So this bullish order block right here, we are paying attention to that as well on the 1 hour time frame. So that's that about the dollar. We are bullish on the dollar. GBP USD, just let's look at the GBP, see if we have something coming on the GBP USD. So as usual, go to the higher time frame, see if we find something significant. So this was what I saw on the GBP USD that gave me the assurance, or more confidence, that the GBP is going to start going down. Right, notice that previously we had a break in market structure to the downside, then that created a new expansion, and we had a retracement into this internal range fair value and the breaker block right here by the left. Okay, so let me outline that carefully. You see that old low right there, the old low there. What's the price, the opening, or what's the closing price here? The low is 1.26751, 1.26751. I just want to get it correctly. 1.26751. That's the low of this candle right here. Okay, so look at how the GBP USD traded into that breaker block right here, this old low right here. It went up to pair up with it right here. Okay, and this also is coinciding with this fair value gap. It tapped into the fair value gap, and look at what we see here. Okay, so we might start to see this dollar, this GBPUSD trading to the rejection block here. We have a bullish order block right here. We have an old low here. We have a bullish order block right here. So we are paying attention to all these levels that I just outlined right now. We are paying attention to all these levels. Then on the weekly time frame, you can see that price took out the buy side liquidity residing above that relative equal high and starts to throw a retracement into the internal range. You can see there are a lot of gaps right here, a lot of volume imbalances that should be the draw liquidity. So we will like to see this pound dollar really reprice into this internal range. Okay, the volume imbalances right here, we like to see it reprice into it. There's one here, there's one here, there's another right here. So I'm paying attention to these levels. Then on the daily, let's see on the daily as well, you can see that a lot of price is showing a lot of willingness to go up with a smart money divergence, because the pound dollar had formed a higher high, dollar couldn't form a lower low, gave us a shift of market structure here. Okay, then we like to see the pound dollar reprice into the internal range fair value. Okay, let's mark it here, this guy to this guy. We like to see trade into that level before we continue the sell, and hopefully this week should do that. If it doesn't, we just watch, we don't force price action, we just allow it to do what it wants to do. Let's do 4-hour time frame so you can see how I'm doing my top down analysis, right? Patiently going through it. So a new week gap open higher would confirm that we are going to reprice into this level and possibly go down. Okay, and look at this, there are a lot of low resistance liquidity run residing below all these levels on the GBPUSD. All of these levels here, retail calls it diagonal liquidity, but it's fake, man, it's fake. You can see that we need to really trade through all of these levels. Okay, so how many pips do we have to the downside? Let's see. 400 pips, 500 pips. This is really crazy, guys. It's crazy. So guys, this is my expectation for the dollar and foreign currencies. If you like this video, don't forget to click the like button, subscribe to this channel. You can share this video to a community of traders you believe they can learn something from. And until next time, I wish you good luck, good trading.